Let's dive into some indicators and examples of price action that we're going to be looking for when we are scalping. So if you're not familiar with moving averages, please take the time to watch the moving average basics video in which I outline the moving averages that I use the most, and these also coincide with the indicators that I use when I'm scalping. There will be a link in the description below on the moving average basics video. That will be recommended and necessary watching if you are not familiar with that terminology, as we're going to be using that quite a bit in this video and in every other live scalping video that I have out. Alright, so we're finally going to go into some of the indicators and the price action that we're going to be looking at while we're scalping. So let's dive right in. So what I did was remove some of the indicators that I had on the chart just to make it a little cleaner and easier to see and visualize everything. If you watch the moving average video, then you'll know that the 8 EMA, which is my green line, I consider it to be my money line. I call it the money line because that line is what represents the most short-term trend in price action. And when you have price above or below the 8 EMA, it could be a key indicator as to which direction the stock is moving. So in this example, we're looking at SPY, which is the S&P 500, and we're looking at a 2-minute chart of price action. And if you notice, at the beginning of the day, the 8 EMA, the 21 EMA, and the 55 EMA were all kind of bunched in together. First thing in the morning, the 8 EMA, which is your green line, was below the 21 EMA, and it was also hovering right at the 55-day EMA. So understanding the moving averages and where they are on a chart is really going to help you a lot in terms of figuring out which way price is going. But anytime you have a shorter term moving average below the longer term moving averages, you know that the price momentum is heading down. So in this example, you have the 8 EMA. You end up seeing here a few minutes into the market open that the 8 EMA crosses below the 55-day, and you begin to see price start to sell off and go lower. Now, one of the easiest ways to kind of figure out that trend was by looking at the moving averages and seeing that at the beginning of the day, the 8 EMA was below the 21 EMA and it was crossing below the 55 as well. Now, if we turn on our 100-day EMA and our 200-day EMA as well, this gives us a little more context as well as to what price is doing. So anytime you have that money line, the green line, the 8 EMA, your shorter term timeframes crossing below the longer term timeframes, that's a bearish scenario. So that means that price is heading lower. So that's the first thing that you want to understand, is where price is relative to the moving averages. In this case, it was pretty clear to see that momentum was slowing down and possibly shifting to the downside. Now, when you're scalping, what you're looking for are breaks above or below previous candle highs or lows. So in this example, if we're looking at SPY and we're bearish and we're looking for a put scalp, which is a bet that SPY is going to be going lower, what we're going to be looking at is the 8 EMA, the 21 EMA, and obviously the others as well. But the 8 and the 21 are your most important ones for short-term momentum, which is what we're looking to take advantage of when we're scalping. We don't really care what it's going to do 20 minutes from now or 3 hours from now. We just want to know what is the probability and what is the most likely move that we're going to see in the short term. So that's what we're focusing on. So in this scenario, if we're looking at previous candle lows because we're looking for a bearish trade, what we're simply going to be doing is looking for when does price touch the 8 EMA, which is the green line, and then drop. All right, so when does it get rejected by the 8 EMA? So you're thinking of it as a ceiling for this particular example. Every time price hits that ceiling, it turns down. And so in this situation here, it keeps hitting the 8 EMA. This is a really good setup to take a bearish position on, buying puts or shorting it via common shares. In this example, what we would want to do is look for previous 2-minute candle lows to be broken after it has tested the 8 EMA. So if we look in this general area, we have price touching the 8 EMA several times. So it's kind of squished in this range here, and there's not a whole lot of clear movement or direction just yet. Now, once you start to see the candles start to accelerate in size and start to break below the 2-minute ranges, that's when you're going to be looking for scalp positions. And in this case here, the first really clear potential scalp would have been a break below this 2-minute low, which also lines up with this 2-minute low. So they're both pretty much in the same place. And when you see this big red candle coming in after this green candle, and the key is that we touched the 8 EMA and then you saw that big red candle coming in. So you know that price is getting rejected by that ceiling, which is currently the 8 EMA. In addition to you having the other moving averages above you as well. You have the 21, 55, and you also have the 100-day here as well. So as you start to see price breaking below this 2-minute low, you could be looking to enter in a scalp. Now in this case, it ended up breaking below the lows, and just this move right here, just that move there would be sufficient for you to make money on this scalp. So this would have lasted you about 30 seconds to maximum 1 minute of a scalp, and you would have been able to take advantage of a profitable trade there. The next setup would have been a break below this candle low, and you got another big move as it broke this candle low as well. When you're bearish, you're looking for breaks below previous candle lows. I like to use the 2-minute chart, the 5-minute chart, the 15-minute chart, and this is just a one chart example. But if you look at my live trade examples, I have multiple time frames on my screen at all times because I need to know where is everything relative to price, because they all work together in sync. Remember, the market is controlled by machines, and machines have certain ways of moving price around. Once you see more and more price examples and you start to get more involved in watching these movements, you'll be able to pick up on things and start to build a trading intuition as to when might be a better opportunity for you to take trades and not take trades. Now, one of the things you want to be careful of is trying to take positions when price is too far away from the 8 EMA. So if you look very quickly at the chart, you can see that in multiple times, price comes back up to test this green line multiple times. And then it finally gets above it for a little while. And then we test the 55-day and that becomes a ceiling and it drops back down again. But you can see that price in these areas, anytime it gets too far away from the 8 EMA, it tends to snap back up like a rubber band and retest that area. And that's why the 8 EMA, I like to call it the money line, because it gives you a really good sense of the direction and the sentiment of price. That being said, I would not be looking for another trade after this candle here, because we are far away from the 8 EMA. And what tends to happen is you start to see price again snap back like a rubber band and test that moving average again. So as it goes back to test it again, you're looking at it as the chart is setting up again. It's setting up for another potential trade. And in this case, the bias is to the downside. So once price put in these two big red candles, you had a nice green candle followed by another green candle that ended up hitting right into the 8 EMA zone again. And what happened here? After these two green candles, you start to see weakness come back in again. That means that the 8 EMA is still a resistance point. It's still a ceiling for price. Now that we're not too far stretched out from the 8 EMA and we're starting to see weakness again, we're looking for a trade now below these two candle lows here. And you can see what happens when price breaks below that previous 2-minute candle low. It drops pretty hard. That's another trade that you would take advantage of on a scalping basis. Now, you might not catch the entire move. You might not hold it till all the way at the bottom, and that's perfectly fine. Even if you got half of that move, that would be a really nice scalp trade that you can take some profits out of within the first 30 minutes of market open. That is what we're looking to do when we're scalping. We're looking for breaks below previous candle lows if you're bearish, And then when you're bullish, you're looking at breaks above previous candle highs in order to take calls or long stock positions. Now, one of the things that can help a lot in terms of understanding what areas may provide as price support or resistance is looking at a daily chart, a 4-hour chart, a 1-hour chart, and dialing it down to see what price areas were serving as support or resistance, also known as supply and demand zones, where price tends to bounce from and where price tends to fall from. Doing this in combination with your moving averages is going to give you a massive edge in understanding the direction of the market so that you can scalp in that direction. Being that this example is a bearish one and we're below the 8 EMA, you don't want to be taking calls for a scalp in this situation unless you're a highly advanced trader and you have some type of edge that you feel is going to get you a winning trade. Why? Because the money line is still pointing down. When the 8 EMA is below all your moving averages, you're looking to short via a bearish position. Things can change in the market, which is why I mentioned the supply and demand, support and resistance zones, and understanding where those are. You can start to see price characteristics start to change. So in this area here, we're basically riding the 8 EMA all the way down. What happens is we start to find some buyers here. You start to see price now closing above the 8 EMA, and then it starts to close above the 21 EMA. For that short moment here, you're not looking to go short here because the momentum is now crossing to the upside. However, you're still keeping it on watch to see if there are any other trade setups that present itself. In this example, the 55-day EMA ended up being the wall or the resistance in price. Once we started to test this 55 EMA, it started to get weaker, and then we began closing below the 8 EMA again, and this provided more weakness in the stock. So you had a few short opportunities here because over here we ended up closing below the 8 EMA. Then we had this little green candle here, and at this green candle, that's when you're looking for another short setup. What you're looking for is a break below that candle low in order to get short or buy puts on that particular stock or market. And that would have netted you another nice scalp because we're not too far from the 8 EMA, we're not super stretched, and we're breaking below previous 2-minute lows. So this is just a super basic intro to scalping. This is not going to go through every single example. So I do highly recommend you take the time to watch the Scalp Mastery Series videos, which are all live trades, which you're seeing my entries and my exits. There are good trades, not good trades, setups that are ideal, setups that aren't ideal, trading at times of days that are not ideal. And these examples ended up being very good for learning experiences. And I'm grateful that I was able to capture all that on camera. I haven't really ever put this out on a format that others can learn from. So I'm really excited to see where you can take this. And I'm very happy to be able to support you along the way and provide the resources that you need to master this strategy if it's something you're interested in. Some people don't like this strategy and it won't be for you. Others want to do swing trading, others just want to invest, and that's perfectly fine. But here we're talking about taking advantage of price movement, momentum. The goal of scalping is to go to bed every night with no positions on your account. You want to be fully cash every night. Why? Because you can wake up in the morning. It doesn't matter whether the market's up or down, sideways. You don't have to trade and your money is not going to be fluctuating. You're going to be safe in cash and you're going to be waiting for the right setups that you like, that you can take advantage of. And that's the greatest benefit of scalping that I didn't mention earlier, is the mindset and the peace of mind that you get from knowing that, hey, if the market goes down overnight or goes up overnight, there's some crazy news, whatever it is, it's not going to affect you because you are fully cash in your scalping account. Now you might have investing accounts or whatever, but we're not getting into all that. We're simply talking about making money on price momentum. All right, so this is part 1 of Scalp Basics, an introduction. We're going to be going deeper into all of these topics So if you got value from this video, please hit the like button and feel free to comment below what you liked about the video, what you want to see more of, and we will continuously update and bring you the best information possible. All right, guys, thanks for watching. Talk to you soon.